Hey guys, and welcome to the Market Profile Series, Part 2, Levels and Charting. Today, we're going to be diving into how we can use the Thinkorswim platform's monkey bars to chart out levels that can be relevant and helpful to our day trading, our swing trading, and our long-term investing based off of what we see in the market profile. We'll be using these lines on our standard candlestick charts. Before we dive in, I just want to stress to you all that I am not a financial advisor, and any information that you get from this video is strictly for educational purposes and is not financial advice. By the way, I'm Darky. Hope you're ready to learn some fun stuff. So, what we're going to be covering today is the actual process by which I chart out my levels that I trade on my candlestick charts every single day. We're not going to dive too deep into the particular theories that surround auction, market profile theories, or anything of the like. We're going to focus strictly on how to draw the levels and how to use the market profile to draw said levels, and we'll cover on some of the importance and the calculations for how we get to these levels. Without further ado, we have our 3-day market profile chart. For our day trading, this is pretty standard, and this is the time frame that we really want to be looking at, making sure, of course, that we're in our 30-minute time frame. We want to always keep that constant and consistent when we're trying to look at daily charts as a whole. The first thing we're going to do is we're going to go ahead and we're going to zoom in on our previous day's trading TPO chart. Now that we're zoomed in on this is going to help us get some more accuracy in our levels. The first thing that I want you to notice is that when you go to add drawings to a TPO chart, you don't have a lot of options, which means if you're trying to share a drawing set between your candlestick charts and your TPO chart or your monkey bars, you need to make sure that the lines that you're drawing on any other chart, if you want it to show up on monkey bars, it has to be a price level. If you do trend lines, they're not going to show up on your monkey bar chart. If you don't know, you can set very specific drawing sets that you can use across all of your charts. So if I was to pop this open, you'd be able to see my general moving average levels and all that fun stuff. But we're going to be working with a blank canvas today. And as long as this and lost my space, and this both are set to the same drawing set, any line that I make on one is going to pop up on the other as long as they can be seen. So we're going to experiment real quick just so I can show you what I mean. All right, back to our TPO chart. The first thing we're going to do is we're going to make a price line for our high of the day. So there's the high of the day. And remember again, this is our previous day or our PD information. We're going to go ahead and we're going to name this our PDH. We're going to turn left extension on, right extension on, and we're going to show the name on the right. I like all these other settings. No, actually, I don't. We're going to use some standard colors for the different days. For our PDs, we're going to go ahead and we're going to use this nice light seafoam green right here. So we just put this in and we've got our PD high, right? This is saved to our drawing set called SPY blank. If I move back over to my candlesticks, which is also set to the drawing set SPY blank, we can see that at that exact same point that I placed my PDH line, I now have that line on my candlestick chart. After we make our PD high, the next line that we're going to make is our value area high. And that's going to go right there. To save us some time, we're going to duplicate our PDH drawing. We're going to slide it down right to the high of our value area. Remember, this is our value area. We're going to edit it. We're going to make this a checked line. And we're going to change this to PD value area high. And now, boom, previous day, value area high. The next line we're going to draw is going to be one for our point of control. Remember, our point of control is where the most volume happened the previous day. Our point of control is going to become important because it can often act as a slowing down point for market activity. Say the next day's market activity is selling off and we get to the previous day's point of control, oftentimes we'll see a slowdown of the action because there's a lot of people who already have positions at that particular level. And it was a level that was agreed upon the previous day that was the fairest market price for that day. Obviously, it doesn't mean that the market action has to slow down there. In fact, if market action speeds up as we move through a point of control, that is a very telling piece of information on its own. That can tell you that a lot of the information that we used yesterday to trade off of has fundamentally changed, and we should get out of the way of the train. We're going to copy our previous day value area high, because again, save ourselves a little bit of time. And we're going to make this one the same color as our point of control. We're also not going to forget to name it the PD POC. So I did want to touch on each of these as we went through them, and I kind of forgot to do that until we got to the point of control. So the first thing we do is we mark out our previous day high. The reason we do this is we want to know where the extreme was set for the previous day's market. So if we gap up above this, we know that some of the information overnight may have changed. And a lot of times we can function off of a gap rule when that happens. The market will oftentimes try to trade back towards that previous day high to establish some connectivity. If it can't get back to that previous day high, that's very telling that the information has changed and the bulls are on a rally. We want to make sure we get out of the way of those trains as well. The reason we mark out our previous day value area high, very similar to the previous day high, this gives us an idea that if market activity is trading within the same zone that we created yesterday, we'll know once we've broken out of that value area what we should be doing with that information. If we break out of the value area and we're immediately pulled back into it, that tells us that that value zone is still very valid. It lets us know that anything outside of it is still currently considered an extreme price, and as soon as we break above it, we have sellers ready to sell. We're going to go ahead and duplicate that, and the next line we're going to mark out is going to be our previous day value low. Very similar to our value area high, the low is going to give us a reference point of when the market has either entered or exited into the area in which the most agreeing happened at the previous day. We're going to go ahead and duplicate our PD POC, and the next line we're going to make is going to be right here where the market price closed the previous day. Knowing where our market price closed the previous day is a good reference point for any time the market tries to move towards it or away from it. When we're moving away from it, that lets us know that where the price ended the previous day is something that when we're moving away from it, that tells us that a trend could be continuing or a trend could be changing. So, for example, we opened down here on this day yesterday, and we closed up here. This tells us that this was mostly a net buying day. The bulls were very much in control today, and they brought the price up. So if tomorrow, say we open up on a gap, and we refuse to come back towards our close, and we start moving away from it, that will give us an idea that the bulls are still very much in control and moving away from yesterday's price. On the flip side, if we open within the value zone and we start dropping, moving away from our previous day close, we get to our value low, we start to see some struggling to maintain price action, and we drop below it. Well, now we've got some pretty good signs that the bulls who were in charge yesterday aren't in charge anymore, and things are starting to turn the other direction. So we've got our previous day high, close, POC, and value low. The next line that we're going to be making is going to be our previous day low. And the same rules are going to apply to that one as applies to our previous day high. The information that we're getting from it is exactly the same, just the opposite direction. All right, well, now we've got our previous day information set, which means we can move on to our T+2. Generally speaking, for day trading purposes, I'm not interested in the exact measurements and locations of our previous days beyond trading days +2. You can mark those out. There definitely can be some relevant information, especially if we break, below our previous day zone or above our previous day zone, or if we're not in a rally and we're in the middle of a bracket, there can be useful information in those previous days, such as points of control, highs, and lows. So if you find yourself in a scenario where you need that information, you can always zoom out a little bit more on your chart and you can see where all that lies. But again, our big focus is we're trying to just pay attention to the levels that we need at the start of a trading day. So we're going to go ahead and we're going to start to set up our T+2 levels. Now that we've got a reference point to go off of, we're going to go ahead and zoom in on that just because it's going to make it a little bit easier to get everything accurate. Accuracy is definitely key. We're going to change this to our value low. We forgot that we made our value lines hashed. Make that our value high. We'll make this our T+2 high. Last but most certainly not least, we're going to mark out our T+2 point of control. We're going to go ahead and make that pink like the other ones. And look at that. We now have our basic charting information for a day of trading. What that's going to look like on our candlestick chart as the market moves up and down. We're going to see where our previous day high, POC, close, value, previous day low are. This gives us a starting point for where we could potentially find points of resistance and points of support. Based on where the market opens relative to these zones, based on where the market moves throughout the day relative to these zones, it'll allow us to place more advantageous trades. As an example, let's say we're opening up on a gap, which it looks like we may have actually done on this day. By the way, I'm in on demand and I've got the time paused just so I can show you something a little bit more specific. But let's say we opened on a gap somewhere up in here and we see that the market's coming down and we just get this stall out of price, 30, 20 cents above our previous day high. Well, we can see that we stalled out getting back to the high, and we can see where the market is currently at. We can open up a long position here at this dip, and we know that if the market breaks back below the previous day high, that our thesis is incorrect and we should get out of the trade so we don't get hurt. But if the thesis is correct and we are rejecting away from our previous day high, well, we've just gotten into one of the best positions for a potential rally, or at least an exploration of the high extreme for the day. Flip side, let's say we're trading within our value zone, and all of a sudden we break out above it, we bounce back, and we start to find support at one of our value areas. Well, that can tell us that this may be a good spot to get in another position for further movement. I'm using calls right now as my example, but it works the opposite direction as well. So the next thing that I want you guys to notice, we did our basic levels for our previous day and our T+2. Now we're going to figure out how to chart our overnight levels or our pre-market session. What I've found over time is that it's a lot easier to mark out these levels using your candlestick chart. The first thing you're going to need to make sure of is that you have your chart set to today and the 1 minute. You also need to make sure that you have your extended hours equities on. So what that does, we're at 9:20 a.m. on December 8th. And because I have extended hours on, we can see the pre-market activity. Because I have today, 1 minute, the start of the chart is literally at the open of the market for today. And because I have my high-low bubbles turned on, which you can also show in your general display, I can see exactly where the overnight low is, and I can see exactly where the overnight high is. That's going to make it so much easier to chart this out. All I have to do is give myself a line. We're going to call it our overnight high. We're going to see that we have a high at 470.98, and we're simply going to change the value number in our line to match. Boom, overnight high line. Duplicate 467.80, and this is our overnight low. Boom, overnight low, all set. Now, the other thing you want to calculate in as well is you want to have your overnight midpoint or your halfback. Now, I use an Excel spreadsheet to calculate this out nice and quick. I'm actually going to drop my Excel spreadsheet at the end of this video for you guys to use, so that way you don't have to do these calculations in your head, and so that way you don't have to set up your own spreadsheet. So I just punched in my high and my low into my spreadsheet, and that gave me another number, which we're going to call our overnight half. And that came out to 469.39. And there we go. Now we have our overnight levels. Now we did those on our candlestick chart. We're utilizing our SPY blank drawing set. So that way, if we go back here, well, would you look at that? Here's where we have our previous day monkey bar chart. And right on our chart, we've already got the overnight high, the overnight half, and the overnight low showing. So as I was saying, it's looking like we could potentially open up on a gap today. Now, the market hasn't opened yet. It's still got 10 more minutes to go, so anything can happen. And of course, this was a previous day, so we already know what happened. But anyways, I digress. So these are our basic levels. We have our high, our value high, our low, our value low, our points of control, our close for the previous day, our overnight high, our overnight low, and our overnight half. There are some more levels that you can include on your chart, which we are going to go over next. These are known as the pivot and the RS. So when we put in information for our pivot, this gives us an idea of where potential resistance and supports could exist based on the high, low, and close information. I'm not going to tell you exactly how they're calculated. I will provide a link where you can see the mathematical formulas for yourself. As well, the spreadsheet I was talking about already has the formulas plugged into it. So all you need to calculate is your previous day high, your previous day low, and your previous day close. And that's going to give you your pivot, your halfback, and all three of your resistance points and all three of your support points. We're going to go ahead and write these out real quick just so you can see how they work. So first and foremost, we're going to take our values. So we've got 4689 as our high. And we've got 46435 as our low. And for our close, we determined it's 468.25. Now, here's another little sheet for your close. Every day at the end of the market and before the market opens, the closing price will be right up here for you. So you don't even have to drop a line on it where you think it is. You can actually just punch it in. So as you can see, the close was 468.28, but where I ended up dropping my line was closer to 0.25. So that's off by about 3 cents. In the grand scheme of things, that being off by 3 cents isn't going to hugely impact us. But of course, the more accuracy you want, there's ways to get more accurate. All right, so I plugged in my high, my low, and my close. Now that I've done that, my formula is spitting back a bunch of numbers at me. The first one that it's spitting back for me is the halfback. The halfback is very simple. The halfback is the exact halfway point between the high and the low of yesterday. And this just happens to be 466.63. Boom. Halfback's all set. The next line it spits back to me is the actual pivot line. And the pivot line, once we have that, is how we end up calculating all of our R's and all of our S's. So the halfback is the high and the low halfway between. Our pivot is the high, the low, and the close divided. And that gives us a slightly different number than our halfback, which ends up being 467.17. So they're relatively close because, again, the pivot is still taking an average of, the information we have. So the high and the low aren't going to change, but based on where the close changes, that's what's actually going to adjust our pivot below or above our halfback point. Now, the reason the pivot is important, or the reason why it's able to act as a strong support or a strong resistance line, is that by taking in the values of the high, the low, and the close and averaging them, we have an idea of where sentiment in the market is. So, for example, we had a lot of bullish sentiment yesterday. So if we come back down to our pivot and reject off of it, that tells us that the bulls are still ready to play. The bulls don't want to see the market drop below that pivot point because they spent all that time getting it up there. The same thing is going to be true coming the other direction, where the bears aren't going to want to see the market go above the pivot because then that says that they're wrong. Now that we have our pivot, and we've got all of our other numbers being spit back at us, we're going to duplicate that, and we're going to go ahead and call this our R. In the name, we're going to call this our R3, and our R3's value is 474.53. Now, I want you to notice that as soon as I put that in, that completely disappeared. Well, if you look, we've got 471 to 464 here. So our R3 value is way up here. The market generally isn't going to move all the way to the R3 or the S3 on a given day. Even when it's trending, that's still a pretty aggressive move. But it is nice to have them for when we do have trending markets because it can give us really good targets for where we might want to think about taking profit or where there could be potential turning points. So the best way I can say that you should think about your R's and your S's, what they really represent is they represent the 3 standard deviations away from the pivot. That's really kind of what they're doing for us. So our R2 is going to be 471.72. And we can see that that moves a little bit down. Duplicate that, edit. This will be our R1, which is going to be even a little bit closer to our pivot, 469.98. So we've got our pivot, our R1, our R2, and our R3. Our R's get their values from the pivot, the high, the low, and our S's are going to do the same thing. But let's say we're opening up and we end up breaking up above our overnight high and we see a little bit of resistance happen at this R2. Well, that can tell us 2 things. That can tell us that the overnight high breakout was a false break, and now that we're encountering resistance at our R2, we could see the market start to retrace. Or we could see it bounce off of the R2, bounce off of the overnight high, and then break through the R2, treating it as a resistance, but ultimately disrespecting it. Now, again, none of these lines that we're making are ever going to 100% tell you that, yes, the market is going to act as resistance here. Yes, the market is going to see support here. They're just giving you lines that you can potentially play off of. And based on what you're seeing, based on what your indicators are telling you, if all of those start to coincide with the lines that you've drawn out previously utilizing market profile, you'll know that if you enter here, you know where you exit because you're wrong, and you know where you can potentially take your profits at. So these aren't going to be used as indicators for entering and exits. They're going to be used as targets. They're going to be used as targets for taking profit. They're going to be used as targets for, I know I'm wrong if this happens. All right? That's why we chart out our levels. That's why we utilize market profile to make these levels. And that's why. Well, guys, that is going to wrap up our part 2 segment on charting out our levels. I hope this was super educational. I hope you learned something, and I hope you're able to use this information to help you become a better trader. Again, I will be providing the spreadsheet that I use myself to get all of the pivot, halfback, and RS calculations, as well as the one that I use to input the overnight high and low into, which gives me the overnight halfback. Till next time, guys.